Hello, this is Richard with in Los Angeles, California. What I wanted to do is a video of it's in following up to my previous skepticism about Bitcoin, possibly other cryptocurrencies. That I feel like there's going to be a big crash sometime this year. I just don't know when. And there's going to be a lot of bloodletting. But again, I just want to say that cryptos are here to stay. My other video the other day, Kevin O'Leary mentioned about Bloodcoin and the creation of the coin, the origination of where at some point the coin was created, that no one can tell what country it was created in, although that China produces most of the coins, but Bitcoins. So yesterday on March 26th, there was an interesting article about India proposing a ban on Bitcoin and US could be next. So I do see that there's going to be some turbulence in cryptos sometime in the near future. But right now, the Indian legislatures has proposed their written documents, and it needs to be passed by their council, their government council, in order to ban Bitcoin in the country of India. So let's look at this article. India will propose a law banning cryptos, fining anyone trading in the country or even holding such digital assets, according to Reuters. The bill would represent one of the world's strictest policies against cryptocurrencies, penalizing possession, issuance, mining, trading, and transferring crypto assets, Reuters reported. If the proposal becomes law, India would be the first major economy to make holding cryptocurrency illegal, making the conditions even more stringent than China's, which has banned mining and trading. So I know that China was having their own government-issued digital currency. I don't know where that is at this point in time. So I didn't even know that they banned mining and trading. Although I believe that maybe 90% of Bitcoin is produced in China. So at any rate, Ray Dalio, the founder of the world's largest hedge fund, Bridgewater Associates, chimed in on this issue. Dalio said in an interview with Yahoo Finance that it could be possible for Bitcoin to be outlawed, just like when the U.S. government made it illegal to privately own gold. Now, let me something about comparing today's reality to something that occurred 100 or 80 years ago worldwide, but particularly in the United States. You really can't compare the two, although one event does lead to the other event. The U.S. government outlawed gold due to commodities restrictions when we were in World War II, fighting foreign enemies. So gold was needed to support the purchasing power of the government. So any country that goes into war needs to have a war chest. And with the war chest, they're able to pay for soldiers, weapons, and so forth. So at any rate, gold was meant to be taken back by the government from the citizens and made it illegal to own gold. And it was a very, very short period of time. There was other commodity shortages, aluminum, copper, and so it was a really hard time in the United States to go through World War II, and a lot of lives were lost. It was truly a crazy time in that point in that reality back then. And I do mention reality because people really need to be thinking outside of the box, to be self-aware, self-analyzing the world around them. And so that's why I mentioned reality. It's not something from books, although I get my information from books. I also get it from TVs, movies, and documentaries. But this is a proven fact that gold was outlawed, but it was temporary, and also with silver. So let's move on. I wanted to show you or share with you the Ray Dalio interview, where he mentions that the outlaw of Bitcoin is possible in the United States.
Is that in a bubble? Maybe three-part question. Is it dangerous? And what do you think the likelihood of the government outlawing it is? And is that even feasible?
Bitcoin has proven itself over the last 10 years. It proved it hasn't been hacked. It's by and large, therefore, worked on an operational basis. It has built a significant following. It is an alternative, in a sense, storehold of wealth. It's like a digital cash. And those are the pluses. Bubbles are financial assets that have imputed value. It's an asset that doesn't have intrinsic value. It has imputed value. It's whatever we think it is. And if you look at some of the bubbles in the past, a great book is Extraordinary Popular Delusions and the Madness of the Crowds by McKay, 1845 or something. But he talks about the South Sea bubble, and he talks about the Mississippi bubble, and so on. It is when people love it. It's the dot-com bubble, and so on. And that could be. So when you look at Bitcoin, it's a possibility. It's an alternative because there aren't many such assets. There are not so many assets that might have intrinsic value that can't be messed around. As far as the government allowing it, the history was, banks always used to exist. And then with the Bank of England, they decided that it was in their interest to have a monopoly on banking at a country. And so what we did is every country treasures its monopoly on controlling the supply and demand. They don't want other monies to be operating or competing because things can get out of control. So I think that it would be very likely that you will have it under a certain set of circumstances outlawed the way gold was outlawed. And you're watching that question arise in India today. India today is making the move to outlaw possession of it. Okay, so we have to see what that means. Now, can they do it? Now we get into the particulars. My understanding from people who are sort of in government surveillance and go on is, yes, they can understand, they can track it, they can know who's dealing with it. I don't know, I'm not an expert on that. But there's a whole way, is it private wallets, is it not private wallets, how do you do this, and the other thing? I would suspect it would be very hard to hold up against that kind of action. So that's what it looks like to me.
Okay. Ray Dalio, is a very brilliant man. He has $1 billion, hedge fund, and very successful. And these are the type of people that it's important to listen to. If you're investing in Bitcoin and other cryptos, I do have holdings in Bitcoin, and it's all controlled gambling. That's the way I see it. So the purpose of this video is that there's these other YouTubers that are like hyping all this stuff, and it's like, I just don't get it. It's the ones that really tend to lose are the YouTube the YouTube viewers that are watching this hype. But they are going to lose because I think this year is going to be a lot of turbulence in the crypto space world, and you guys are going to get hurt. But if Bitcoin and the other cryptos are here to stay. So they're here to stay unless they're outlawed by the United States, due in part through Congress. But I'm bringing this out to you because there's always a lone, there's always a lone, like a lone messenger that is out there in the crowd, and he's contrary to the flow of the crowd, and usually that person comes out ahead of the game. But here, I want to also bring to you about the 1929 stock market crash. So what happened in 1929 through the roaring 20s, there was a lot of exuberance in investing in stocks. And it goes back to reality. We didn't have the internet, and I can imagine because I was born in the 60s, and I've seen how life was through the 70s, and it was very hard to earn a living. It's hard work, and the jobs were different back then. You had warehousing, banking, grocery stores, and driving a bus as an occupation, which was considered very, very, very good. You were up there. Then computers came out in the 60s and 70s, so people, a very few segment of the population got into computers, law, doctors. So, and it was very hard to get into those fields even back then in the 20s and 30s. And so the hardworking Americans saw all this exuberance in the 20s, and they try to find a stockbroker. They go to the stockbroker. They invest what little hard-earned money, and they put it into stocks. So, but they didn't consider, and they weren't even aware of the ability of the stocks to crash and the investments to be vaporized. So that being said, what happened in the stock crash in 1929, it says here, it's just a small excerpt. Production had already declined and unemployment had risen, leaving stocks in great excess of their real value. Among the other causes of the stock market crash of 1929 were low wages, the proliferation of debt, a struggling agricultural sector, and an excess of large bank loans that could not be liquidated. So it's kind of similar to what's going on today. When the problem hit March of last year, the government knew already that they had to come up with stimulus. So the only reason why that occurred is because in 2008, 2009, the economy tanked, and the government stepped in, but it was very, very slow. Whereas within maybe about 30 days, the government stepped in and they were flooding the economy with money. And that's okay as long as you can get productivity up and running to gain back those stimulus dollars through taxes paid back to the Federal Reserve System. But back in 1929, you can see that there's similarities to what's going on today and back then in the 20s. So, we do have low wages. I haven't seen salaries go up in pace with inflation and purchasing power. I haven't seen it. I'll do another video on that, but I haven't really seen it. I've interviewed at companies and they don't want to pay the buck. There are a few that have a master's degree and they do earn $150,000. I'll do another video on that too as well. But that's very far between most average Americans working. So there are lower wages. The state of California had issued a hazard pay to grocery workers, and already the grocery markets are closing up in Long Beach and some parts of Los Angeles, and it's really sad. So, the wages are low compared to how citizens can, maintain a standard of living in the cities that they're living in. There is a proliferation of debt. I don't think the stimulus, people are spending their money to pay down on their debt. Instead, they're going to Walmart, they're buying these TVs, and it's making other countries rich. It's not helping us here. And so the debt level is still at the same, and maybe if it's going up, I just don't know. But I just doubt it. I'm not seeing it. Las Vegas has boomed just recently, the last couple of days. So people are taking their stimulus dollars and going to Vegas, and just So I'm not going to make a comment about that. Struggling agricultural sector, yes, it's struggling today, even because all our food is imported. I know in California, which is a major agricultural state, everything is manufactured based on GMOs. And you're not really getting wholesome, fruits and vegetables. It's all genetically modified. And saying that too as well, it's about a yield factor and producing as much as you can with what little you have. So there's some importance to that, but I have my skepticism on GMOs. So, but we import a lot of food from South America and other countries. Bananas, oranges, they're all imported, believe it or not. So I think the most that we do produce in this country is housing. And that's a different reality. It's we're not producing as much as we did 40 or 50 years ago. And, moving on, excess of large bank loans that could not be liquidated. So paying down on debt is very important. What I wanted to say about the stock market crash is that people didn't really know what stocks were back then. They saw all the hype, and they saw, they believed that people are making a lot of money in the stocks, and it would be better for them to invest and make money for themselves. And they took the hard-earned dollars and put it in the stock market, and they all got burnt. And there's some interesting documentaries about the players, including J.P. Morgan and some other ones. Even Joe Kennedy, the father of John Kennedy, Robert Kennedy, he was a major player in the stock market back in the 20s. They all tried to bolster up the stock market by pumping in money on their own, from their own pockets, and that did not even work. So I see similarities with this, with the Bitcoin and cryptos today, and I just feel that there's going to be a lot of bloodletting. Now, if India does go with this ban, and I don't know what's going on in China, but then I think there's going to be major reversals in the crypto space. And I'm not advising you on anything. I just want to share with you my skepticism. But like I said before, it's all controlled gambling. You're not really owning something with real value. It's money going in on a macro level and money coming out on a micro level. Bitcoin today is at 56,000, and the market cap, you can see here, it's over $1 trillion. The stock market itself is about $100 trillion. So when you compare the crypto space to the stock market, you're talking about $1 trillion compared to $100 trillion. It's 1%. So, but these other YouTubers are like professing, oh, this is so great, and look at this, and oh God, oh wow, I'm just trying to help you guys out. You use your common sense. It's controlled gambling, and it's very interesting stuff. It's going to be here to stay unless Congress bans it. And I think part of the reason is not the threat to the Federal Reserve. I feel that people are going into this space not knowing the hazards. And if you want to make payments to somebody, you can simply go to your bank, or you can do it through email and pay somebody through your email account tied to your bank account. I just don't understand all of this. I know there's a large segment of the criminal population in the world that uses this, but there's a limitation to it because you still need banks to upload to Coinbase. And then, if you want to pull your money out of Coinbase, you got to have a bank. So I don't get it, So anyways, I'm going to do some videos, some more. I'm trying to get as much as I can out. And I do have family. Please like and subscribe to my channel. I really need your support on my channel. And stay tuned for further videos. Thank you, and thank you for your time for watching. Have a good day.